They say investing is safe and trading is risky. But what if I told you both can be dangerous, and most people are losing money simply because they don't know the difference? You could be calling yourself an investor, but actually trading. Or worse, you're trading like an investor, and that's why you're stuck. In this video, we're breaking down the exact mindset, tools, and timelines that separate real traders from real investors. Not what the internet claims, but how it actually plays out, based on what people who've done both are saying. Because if you get this wrong, you're not just wasting money, you're wasting years. You'll see what exactly works for you at the end of this video. All right, let's start with investing. Think of investing like planting a tree. You drop a seed, your money, into the ground. And over time, with patience, it grows. Could take years, could take decades, but that's the point. It's long-term. Stocks, mutual funds, ETFs, even real estate, those are your tools. You're not trying to time the market, you're trying to ride it. People like Warren Buffett swear by this strategy. His favorite holding period is forever. You've probably heard YouTubers say, investing is safe, slow wealth. True, but only if you know what you're doing. Otherwise, it's just throwing money into stuff you don't understand and hoping for the best. And hope isn't a strategy. Now let's flip the coin. Trading? That's a whole different beast. Here, you're not planting a tree. You're catching waves, big, fast-moving ones. You buy low, sell high, or short high, buy low. The goal is short-term profit. Could be within days, hours, even minutes. Trading isn't investing's wild younger cousin. It's its own universe, with charts, indicators, and a lot of adrenaline. You might have seen traders on YouTube showing off $2,000 in profits before breakfast. But what they don't always show you is the $5,000 they lost the day before. That's the reality. Trading is skill-based, emotional, and incredibly tempting. But just like gambling, it can punish you if you're not disciplined. So now you're thinking, okay, trading is wild, investing is slow, which one do I do? And here's where it gets interesting. Because the truth is, they're not enemies. In fact, a lot of smart people do both. Why? Because trading gives them quick cash flow. Investing gives them long-term stability. It's not either or, it's strategy. Trading requires more time and attention. Investing requires more patience and knowledge. Both can make you money. Both can lose you money. So no, neither one is better, but one might be better for you. And if you're thinking, I love the idea of trading, but I don't have the time, skill, or the nerves for it, then let me put you onto something. Wealthflow is a passive copy trading platform where you literally copy the trades of vetted, prop firm-level traders. It's like borrowing someone else's trading skills, transparent stats, smart tech, and if you're a trader yourself, you can even get paid to let others follow you. Want the trading edge without all the chaos? Wealthflow's your lane. Link to startup will be in the description. So, trading versus investing. One's about the now, the other's about the later. One needs speed, the other needs patience. Don't fall for the hype on either side. Instead, ask yourself, what do you want? Fast growth with more risk, or slow wealth with less control? And if you want a blend of both, platforms like Wealthflow make it easier than ever to bridge that gap. This isn't a one-size-fits-all journey. It's your money, your path, your move. If this helped clear things up, hit the like button. It really helps the channel. Subscribe for more realistic finance talk. No hype, no fluff. And drop a comment. Are you more of a trader or an investor or both? Let's talk in the comments. See you in the next one.